This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to take a look at the market trade here on this Thursday, let's say good afternoon to Bryan Doherty of Total Farm Marketing. He joins us here on the program. Bryan, great to have you back on, sir. Hope you're having a good week. How are you?
Not too bad, Jess. Thank you. I hope you're having a good week as well.
Definitely am. Yeah, it's I thought, looking at things here throughout much of the day, we were going to have a fairly quiet discussion today, but Bryan, late in the session here, we've seen a pretty robust sell-off in grains, corn, soybeans, wheat, you name it. Getting the breaking news here about this UN broker, Turkey broker deal to get grains out of the Ukraine. Sounds like it's going to be signed tomorrow officially. So I'm wondering if that was the big catalyst here in this late session sell-off today.
You know, it probably was. And what you're dealing with some markets right now that just can't find positive news anywhere. Export sales were out this morning, dismal again. The implication simply is that supply might be on the grow, and it's on the grow from lack of demand. So we'll see if the USDA in August makes any adjustments, but this is 4 weeks in a row with clunker numbers for corn. I kind of get it. End users, as they see the market maybe drifting lower or dropping, will just step back and let it go until they jump in and buy. I'm hopeful that this signing is buy the or sell the rumor and buy the fact, because boy, it seems like since this has been talked about, the markets have done nothing but dive, in particular wheat, on this talk. And we've taken all of the war premium out. We've taken all of the weather premium out. We're past halfway done with harvest and wheat. You kind of hope at some point here we start putting on the skids. And you can argue wheat's consolidating this week, but it doesn't have any strength to it.
Well, and I wonder as well, how much of this is maybe some of those algo computers trading these headlines? Because to me, I look at this situation and go, okay, we sign a deal. How long is it going to take to demine ports? Is anyone going to insure these ships carrying this grain? I mean, to me, I think those are all valid questions that have to be answered before we'd see any grain come out of the Ukraine. So to me, this feels like a computer-driven kind of read the headline on some website, and that feeds into the computer and it moves us lower, Bryan.
I think you have some point to that too, and you probably got that same sort of reaction on the overnight trade as well, due to the 6 to 10 day forecast, putting some more moisture in for the central Midwest. So the fund money is either liquidating or adding to shorts. And then we talked about this before, how sometimes you get these additional type of selling or sellers selling occurring. There may be people who are friendly to the market, they buy, but the market hits their stop order. That means they're triggered. That becomes a sell. Margin calls, things like that. You have these new sell orders, not necessarily bearish, but they accelerate or accentuate the downturn here. It'll be interesting to see what comes out of that part of the world, because you're also seeing some really, from my understanding, some kind of stressful temperatures over in all of Europe as well, and into the Ukraine, Russia region. So whether that kind of nipped away at the crop a little bit too. Here at home, we're kind of talking to the haves and have-nots. If you have, you're in really good shape. You've got some moisture lately. You're going to get through pollination. You've got the ideal forecast now with more rain in it and cool down on temperatures. The have-nots, boy, they're really struggling with this heat that's going to be around for a little bit and really exasperated in moisture. But right now, with about 2/3 of the crop rated good to excellent, the market believes that's enough right now. It's good enough.
Well, and I was going to say as well with the weather, looking at today's updated drought monitor, seeing some of that drought area expand in parts of the Western Corn Belt. I see an area there, Northwest Iowa, Northeast Nebraska, that could be in question here unless they can get a shot of rain. But to your point, the haves and have nots, Southern Minnesota, parts of, Northeast, Eastern Iowa, Illinois, Indiana, a lot of these major producing corn areas, they're looking pretty good. And the other thing too, later planting for many areas. So, one has to wonder what we're looking at for pollination right now. Are we just getting into that corn pollination? Have we started already in many areas? Where are we at? How much of a delay do we have? But I think overall, like you said, it's the haves and have nots, but that Western Corn Belt really just uptick this week with all that heat and dryness, Brian, and that has me a little concerned still.
And it should, and it'll probably pull corn out of the central Midwest. But the bigger picture, again, you look at it, and this time of year, it'll take weather premium out as long as there's a conducive forecast. There's hardly a day where we've gone over the last month, too, where there isn't some kind of rain developing on the radar. No, maybe not much today, but my theory is if there's rain on the radar, it's just a matter of time before it gets to everybody. Now, it hasn't gotten everybody, but there were lots and lots of dry regions in Illinois and Indiana and Ohio that really got a good development of moisture here. So right now the market is doing what it does. It takes weather premium out. As I mentioned earlier, the export sales continue to remain sort of an Achilles heel, and this market just doesn't have it right now. We've had some rallies each on Sunday night, Monday, and it gives it up very quickly. Tells me more liquidation. Funds have been strongly long. So, we're getting the question, well, how far can this go down? And what I need to kind of remind everybody is that there's momentum when you move downward. And you look at last year's lows on the December corn futures contract is maybe is that a possibility this year? We're down around $5 on this particular contract, the 22 contract. That now becomes a new target point. And why does it become that? Well, today we have our lowest close since January and going to February. We picked your September, December corn contract. So same thing in soybeans. So you think about it, in soybeans, we've now taken all of the war premium out. We've taken the drought premium out in South America. The market's looking ahead saying, well, exports are slowing and there'll be more crop out of Brazil in the year ahead, assuming normal production. So that's part of the overall sluggishness we have to the marketplace.
Well, and something I've been hearing from some producers as well, watching, and maybe they marketed ahead some new crop already, but maybe they're in a have not area right now and they're worried about what kind of corn crop they might produce and whether or not they could cover what they've sold if they feel they've oversold themselves. So if I'm in that situation, what are my options? Am I looking at a put here or a way to get out of some of that cash contract and protect myself and protect some of that risk in case I'm worried that I might not have the crop this year?
Well, that's a good question because it's real, first of all, and so we want to address those concerns. So if you're a farmer and you've got things pretty aggressively sold, the market's lower now. So there may be a way to buy out of your contract. You may have to give up something to do that. That would probably be my first approach now if you've sold higher than where the market is. The other thing you can do too is this isn't really getting out of your obligation, but if you're worried about prices going down, I like still buying the puts. We've talked about that for quite some time now, buying puts in December corn or March. And then I would like to go well above the market and sell a call or a couple of calls in December, 680, 690 calls, and really challenge the market to move higher. That means, to have those calls gain value, we've got to have a turnaround, the uptrending market. So this is really for the farmer that's pretty light on sales. And this farmer is willing to maybe even meet some margin call, but of the mindset that, look, if this is what kind of takes to turn the market around, I'm willing to do this. If the market doesn't turn around, you've got a put bought and you're helping to finance that put. So you're putting a flooring mechanism in. at $6, I was really stuck between a rock and a hard place. It's still a good price. It's not a great price. $7, 7.50 is a great price. 5.80, yeah, it's $6. It's still worth defending. I still worry that, the mindset looks at this from a different angle and goes, that's still a high price for corn. We know fertilizer was high and all this kind of stuff, but we don't really care because China's on lockdown. They're not buying much corn. We've got room to go, and that's what worries me right now.
And I know as well, looking at cash basis, one is wondering when that might start to take a bit of a dive. It's sounding like, especially on the soy side, a lot of end users have their needs covered right now. So I know that's something that we're watching closely as well as basis across the Corn Belt here and across the Midwest, Bryan.
Right. Base is important. Keep an eye on that. The remember, there's always two sides of the coin, and so now we're talking about end users out here too that are looking at. I really wasn't expecting I'd see this much of a drop off, or at least I think that's going to be the reaction when they were looking at things just a month ago that were dramatically higher. So it's time to monitor that too from an end user perspective, feed user perspective, especially soybeans. If you look at the soybean market, it's a little bit late, first of all, in its planting. And second of all, the critical weather is yet ahead. So we've got some rain in the forecast, but it's been hot. If these rains are not, let's call it, blanket coverage, and the heat kind of comes back in, somebody starts talking about a dome of pressure and all of that stuff, there's plenty of time for that to have impact. So if I'm an end user, I'm certainly wanting to look at call options, buying the meal, buying whatever corn, maybe buying puts against it, looking at basis, locking basis if it's attractive. We suspect that corn base is real tight on old crop corn, but that'll probably loosen as we get closer to September as well.
Bryan, let's switch gears and talk livestock. This cattle market feels like it's in consolidation mode ahead of Friday afternoon's cattle on feed and biannual cattle inventory report. Would you agree with that? It just feels like a kind of a consolidation day today.
It does, and it feels like a market that wants to go higher, but it just has all these sort of strings with weights on it pulling it down. Whether it's inflation, whether it's just high energy, all these things that kind of keep holding it back. I think you want to be overall friendly to the market. The numbers that we're looking at there again should confirm lower cow herd. Drought conditions out west, impactful over the last several years, in particular with high corn prices right behind it this past year. So the cattle market, I think, is well supported from the supply side. We've talked about that a lot. And actually, we saw some good evidence of that, I think, in the feeder market. So as corn prices tip over, feeder prices go higher. Goes back to that language last fall when we were talking to some of the guys that were looking for feeders last fall and early winter, just tough to come by. So I think that's what we're going to find out in big picture perspective out of the inventory as well as cattle on feed reports.
How about hogs? August hogs again, very strong today. Cash has been on fire this week. What do you make of this hog market, Bryan?
I think it comes to the cost of cattle a little bit. I think the hog found some good support in the retail sector is what I think. We've gotten good cash prices, good bids, good product movement. Somewhat surprising because people might look at this and go, well, China's on lockdown. Well, they're not really importing pork anyways, not to the degree that they were 2 years ago. So when we look at the pork consumption, it's really domestic driven here. And I think it was just the value in the store. And we found out that the market is in an upswing on demand, and we're getting good price activity there. But remember, all hogs and pigs showed every category down 1%. So high prices do cure high prices in the sense that grain got high. Part of that cure to the grain moving down is just less. Well, we're going to find out we just have a smaller herd, both in cattle and hogs. But yeah, you got to like that front month cash month. It sure makes it looks like that, like the October contract trading a solid $20 behind August, and the index has got some room to work higher as well.
Yeah, I think we'll be watching that very closely here the next couple of weeks ahead to see if it can work its way higher as well. Bryan, dairy market this week, looking today, fairly mixed action, I guess I would call it. What are you seeing there? Anything stand out in dairy?
I call it mainly lower again. What stands out is it's in a pretty steep downtrend. Doesn't matter if you take a wheat chart, dairy chart, corn chart, you can lay them all over each other. They almost are identical. But, again, just goes to show, when you're at high price levels, when things do tip over, they can kind of tip over nonstop. And I think the dairy market once again might have fooled producers in that we saw the rally peak in April, drop off some in May, and then came roaring back into mid-May, testing that $25 area, and then all of a sudden you give up $5 real quick. Still good prices. We don't see the expansion out there, but with corn prices coming down and feed availability, there is going to be that sort of that perception, at least, that the herd will be on the rise. I'm not sure the $20 milk and $100 crude oil cut it, though. The energy side and then the labor side is still prohibitively disruptive. I'm going to use that word in the dairy expansion.
Well, and you mentioned energies there too. I mean, we've seen energies on a downtrend today. Crude oil back under $100 a barrel. Gas prices have been coming down a little bit, but still, this energy market, I know a lot of eyes, a lot of focus is right there now as well. Still, as we continue here into the back half of July.
Mm-hmm. Correct. Yeah, the focus will be on energy. There was the opening of the pipeline today in Europe, so that was kind of a step. Let's go in the right direction. That maybe, a thing that's kind of bothersome in all this. It seems to me it's bothersome is I was reading today about Ukraine or Russia annexing part of what they took in Ukraine. So, ultimately the end, it looks like we're seeing Russia kind of get the upper hand on all of this. It shouldn't be. I guess they were supposed to be hit with. He wouldn't, according to President Biden, he was going to be hit with things so hard he wouldn't know what hit him. Doesn't kind of feel that way to me. So maybe that's the disturbing part of this, that you're losing so many lives and young men in Ukraine every day. I just don't. We still longer term have high energy prices, inflationary concerns. So just from a more of a macroeconomic sense, we went from a lot of commodities that worried about inflation and not being able to secure it in world hunger to, well, who can afford it with inflation kind of mentality. So I kind of rambled on there a little bit, but there are a lot of moving parts, in particular, again, in Ukraine, Black Sea, energies, Russia's in the middle of all of it.
Bryan, great stuff as always. Any final thoughts for us here real quick before we run out of time?
I guess this isn't the browbeater or anything like that, but just, recognize that when trends start to go one direction, they can overdo it. So we're probably still looking at downside weakness in the grains right now. The bears are going to be flexing their muscle. They're fully in charge right now. They've got the weather forecast they need. So still looks like some downside weakness. So if there's any strategy ideas anybody would like to talk about, they're welcome to give us a call and we can walk them through that if they like.
And if folks want to give you guys a call, what's the best way to do that, Bryan?
Just pick up the phone and or flip it open or whatever you got. Swipe it. 800-334-9779.
And I know you can find them as well online, totalfarmmarketing.com. With that, Bryan Doherty with Total Farm Marketing. Always a pleasure, sir. Have a great weekend, and we'll talk to you next week.
Jesse, thank you. Best of luck.
Bryan Doherty with Total Farm Marketing joining us today. That's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.